It is my utmost pleasure to introduce Mr. Evgeny Angelov, who comes in his capacity of chairman of the Bulgarian Private Equity and Venture Capital Association. And I think in private equity, you combine both. You manage the size to go bigger and the education to have its capital contribution. So the floor is yours.
Thank you, and thank you for the invitation. Well, first of all, I should start by saying that I've never been more optimistic about Europe, especially because we're in a crisis. Actually, we're in several crises. They've been adequately covered by many people much smarter than me, so we've got lots of detailed identification of problems and possible solutions in the Letta report, in the Draghi report. And on top of that, I think for the first time we feel a real kind of commitment by European leadership. This is at the Commission level, but also at different national levels, that something must change because the world has changed around us. So, and this is very positive. Of course, we can still screw it up. I mean, it won't be the first time, but it's really an opportunity for Europeans to get their act together and, become much more significant player in the world. So, on that point, I'm very positive. What remains a huge challenge is to convert this into actionable tasks for all of us to do and implement, etc. I think it's both at the European level, also at the national levels. I feel still a lack of urgency in the implementation of these things. So even the word simplification, which we keep talking about, I particularly dislike it because it doesn't kind of convey the sense of urgency that we must have on these topics. So the big challenge for Brussels is to get the bureaucracy to change the way things are done. And the implementational challenge of that is very significant. And what we've been asking for, we hear it from companies all the time. I think Mr. Letta alluded to a lot of these things earlier. The biggest problem is with over-regulation and huge European fragmentation. And this for companies that we would like to scale, to be champions, to innovate, etc., is currently, I would say, absolutely not possible. Our companies that we invest in, for them it's much easier to scale in the US than it is to scale in Southeast Europe and the region. So what happens frequently is that we have a lot of the R&D teams of the innovative companies are based out of Sofia, and all of their sales efforts, investor base, etc., doesn't go to Berlin or London or Europe. It goes directly to the States. So this is what we would like to address. And so we've kept proposing. We participate at the European level in various working groups with various commissioners. So one is to kind of make a bold statement on deregulation. Cut a third of all of the red tape, whatever that means. Nothing dramatic will happen, nothing will fail. It will just give the imperative to start working more effectively. So that's number one. Number two, where we see a huge issue is that, after 50, 60 years of European integration, the single market is making almost no progress in any of the significant areas, even those that are not concerned with national identity, etc. So in capital markets, in energy interconnectivity, in the ability to use the same sort of rules for companies to expand and serve customers across the European Union. So of course it hasn't happened because it's difficult, and everybody is pulling in things towards their in their country, but that has led us to completely kind of drop out of the competitiveness race vis-a-vis China and vis-a-vis the US. So that's the second thing important for companies in innovation is this, functioning single market. And the third thing is about innovation and investing in innovation, and we talk about it a lot. And the way it needs to be addressed, in my view, is not through a government or pan-European initiatives, etc., because they will still be very small. Even if 500 million is raised at European level, it's a drop in the ocean in terms of what is needed. So what we've been advocating, and I think there is now quite a lot of recognition of this, is that we need to mobilize European savings, particularly those in pension funds, insurance companies, which, first of all, tend not to invest in riskier asset classes. For example, in the US, these institutional investors represent something like 30% of the capital base of venture capital private equity. In Europe, it's around 5%. In Southeast Europe, it's practically zero. So what do you expect to happen? So what we are seeing is that there is some grant funding, some seed funds in Europe that kind of kindle the ecosystem, and as soon as you get to a level that you're deserving, you can raise 10, 15, 100 million, inevitably you have to look elsewhere. And this is, I think, easily addressable. So to think of mechanisms, I'm not going to bore everybody here with the details, but there are functioning mechanisms to support this type of investment, to get these institutional investors to get into this space. So again, I am cautiously optimistic that we also on this, we are on the right track.
Mr. Angelov, thank you so much for being brutally honest, but still keeping the optimism. At the end, it's really needed for all of us. My question is related to your vast experience, and it's, could you just point out one policy objective of Bulgaria in the context of competitiveness, something that comes to your mind from your experience, vast experience?
Well, I was hoping to limit to the 4 words, but with 4 topics on competitiveness. Just very quickly, I think if we want to be serious about improving competitiveness, and we just don't talk about all the problems and all the wishful thinking around these important topics we're discussing, I think one is the rebalancing of public and private sector in Bulgaria. There's shortage in almost every part of the economy. On the other hand, we have one of the largest per capita bureaucracies, for sure, in Europe. So you have a lot of productive people thinking of more and more regulations, how to regulate the other part of the economy. So that's one thing. And I think nothing dramatic, again, will happen if you remove half of the ministries and half of the administration. The country will not fall apart. In fact, it might accelerate its progress. That's number one. Number two is this e-government that we've been discussing for the better part of the past 30 years, and it's still nowhere to be seen. I think we should just kind of almost give up the idea that we're going to develop this ourselves. Buy a ready platform. Number of countries have excellent e-government platforms, and adjust our regulation where it doesn't fit, if we cannot make it happen. And I think thirdly, we are lacking national priorities of development, and I realize it sounds like a kind of North Korean presidium plea, but the reality is that all countries have priorities. If China can have priorities, if the US can have priorities, the smallest country, well, one of the smallest countries in Europe cannot afford not to have priorities. And this is something that we should demand from our public representatives. That's why they get paid the big bucks, is to have this difficult discussion around where we're heading, which parts of the economy are important, which are less important, and so on. And lastly, in terms of our own industry, and of course I'm biased here, but in the past 15 years, I think the venture capital private equity ecosystem has had an impressive progress. So there's now about 20 fund managers that are locally based, about $1 billion level under management from zero 15 years ago. And we were by far and away the leaders in our region. And now we're losing this lead because everybody's catching up to this idea. So we need to make sure that the initiatives that are now going through Parliament with allowing pension funds to invest in insurance companies, they're a little bit bolder and more risk-taking, I would say. So that's our priority, and I stop here.
Thank you so much, Evgeny.